Well, folks, there is so much going on in the market right now. So many important things are changing right now in the market that I want to show you. The whole market is essentially shifting beneath the surface right now, and I want to show you everything that's going on and why this is essentially kind of changing the trajectory of the market. So many stocks to talk about in today's video. A lot of great news to share with longs out there here today in this video, action-packed video. I appreciate everybody joining me and being subscribed to the channel as always. Just so you guys know, with the pinned comment down there, you can get up to 15 free stocks from moomoo this month. So definitely check that out and get your free stocks valued up to $2,000. Okay, right off the bat here, Netflix, massive move up. This, I mean, if this stock's up kind of what it's up after hours, which I've seen it up 13-14% or so, this will likely be one of the biggest moves for Netflix stock in a long time, okay? And I mean a massively long time. And here today, the stock traded heavy as far as volume went. It looked like a lot of people were scared kind of going into that earnings, and I'm just like, I don't know why they were scared going into that earnings. This was a perfect setup for Netflix to have one of its biggest days ever as of tomorrow, okay? So in regards to Netflix, what happened here essentially is the streaming giant posted better than expected subscriber growth in the third quarter. The company added 2.4 million net new subscribers in the quarter, beating its own forecast of 1 million additions. Netflix said it expects to add another 4.5 million subscribers in the December quarter. That's massive, okay? And you know, I looked at this, right, and I said Netflix's, expectations for themselves is on the floor. So now they brought down everybody's expectations. So everybody was expecting nothing from this company, right? And simultaneously, they have a couple of huge hit shows right now that everybody's talking about on social media, which Netflix hasn't had for a bit. And now all of a sudden, everybody's talking about Netflix again because of a couple hit shows out there, right? Plus, they're about to have this new ad streaming service, come out essentially, right? Which is basically their service, but with ads supported, right? And I think that's going to be a huge moneymaker for them. I don't even think people understand like how, one, they're getting people to pay for this service, right? And they're going to be able to collect a lot of customers who just wouldn't have usually considered Netflix. But two, they're going to get so much money for the companies that are basically paying for those ads. It's ridiculous. It's like pretty much the highest you're going to pay anywhere. And they're going to command that, and they're going to get those prices. So I don't even think, I was funny. I was listening to some folks on CNBC talk about Netflix and like, oh, I don't know about this, and it might cannibalize, some of their users from here and here. And I'm like, oh gosh, man, these folks think they can run Netflix's business better than Netflix can run their business. They don't even have a clue what's coming here essentially, okay? And I usually don't like to do short-term moves, but even I text a friend, I'm like, I want to buy calls on Netflix so bad, like short-term calls, because this is just absolutely perfect setup. You're talking about this stock was beaten down heavily. We're talking about a stock price that's down almost 60%, right? And when it comes to Netflix, this is one of the most important stocks for the entire vibe of the stock market. I think it's the most important stock outside of maybe Tesla for the vibe of the market. What do I mean by the vibe of the market? The vibe of the market meaning people want to go risk on or people want to go risk off, right? And obviously, over the past 12 months, it's been completely risk off, right? And especially this entire year, risk off. And what happened to Netflix stock? The stock went from $700 to under $200 at the lows, right? And I see a shift going on out there, and I'm going to show you a lot of different things that are going on, right? That is going to shift us toward risk on over the next couple months here, essentially, and create the epic rally that I've been, kind of talking about, and that I posted that video 5 days ago about the epic rally, right? And Netflix is just the perfect candidate for this massive kind of move up here, okay? FuboTV, there's a stock that's made a massive move over the past 3 months, up almost 60%. And when it comes to Fubo, in the past 24 hours, they reported some phenomenal news, essentially, okay? So revenue and subscriber growth in North America are expected to exceed previously issued guidance for this another huge streaming company. Just they're a different type of streaming company than somebody like a Netflix, essentially. The company is expected to close the third quarter 2022 with North American revenue of at least, keyword, 210 million, an increase of approximately 34% year over year, and rest of world revenue of at least 5.5 million. Prior third quarter revenue guidance for North America's streaming business was 200 to 205 mil. So obviously, they're easily beating that. Paid subscribers for North America is expected to exceed 1.2 million, more than 27% year over year. And they're also in a situation where they got they're saying they're going to have at least $300 million in cash and cash equivalents. And they're also getting out of the gaming business that they were going to try to get into, essentially, that was going to likely be a huge money loser. So obviously this is something that I think a lot of investors definitely want, because we're talking about they're growing much more quickly than folks expected, and now they're getting out of a business that people are looking at and they're like, okay, what's the future of this? How much money are we going to lose here for a long time to go in the future, right? If we're ever going to make a profit from this business, and obviously the market's very focused on profitability, right? And so the way I look at Fubo, and by the way, it's moving up after hours, likely because of Netflix news there. I just look at Fubo as a higher risk, higher reward play than Netflix. Netflix, you get a very cheap valuation for that stock compared to where it should be trading at. With something like a Fubo, it's obviously higher risk because it's a money loser versus Netflix, a money maker, right? But obviously the reward here is ridiculous. Like, this is one of those companies that could be tens of billions of dollars of type market cap if they continue to expand their business. They're getting close to escape velocity on their business. I would say they're probably about 12 months away from that. Escape velocity meaning they're just at a point in their business where they have so many people starting to use the service that those people are telling their friends and family how much they love the service, and it just kind of spreads from there. And you are able to be in a situation where you don't even have to do as much marketing because people are just spreading the word about your product. Like me, for instance, I tell all my friends and family, and always posting like I'm watching 4 games at the same time, which is just insane as a sports fan. Okay, so when it comes to me with Fubo, obviously it's a position that's started out very well. I wouldn't even consider, if this stock was $20 tomorrow, I wouldn't even consider selling it, to be honest. That's a throw in the filing cabinet and play it over the next few years. Okay, now massive change came up here in regards to NASDAQ here today. Okay, so basically we had 2 massive dumps on the market here today, and who knows why those happened. Might have been shorts, might have been, who knows. Okay, but that happened. Okay, and market came back, and then they tried to dump it again, and the market came back. Now that's a huge change from the market we've been used to, because the market we've been used to for basically this entire year is a market dumps and it doesn't come back, right? And it just finishes out the day at lows or something like that. So that's a interesting shift there that just happened today in the NASDAQ, right? This is even more important. The oil price continues to move down, so down another 3% here today. It's obviously in a kind of a massive kind of downdraft here, and we're going into winter time. So there's so many folks on Wall Street that are super bullish on oil, and the reason they're super bullish on oil is because oil performed very well, obviously into early summertime, right? And so they're still caught up in the past success of oil and think that's going to do phenomenal or something like that. And I think it's a tougher operating environment than I think a lot of folks on Wall Street really realize, right? And they've been telling everybody pile into this stuff, and obviously it hasn't been working, right? As far as the dollar index here, so the dollar index starting to fall. Now, here's the deal, okay? If this baby keeps falling, the market's going to keep moving up, essentially. And this has been working against the stock market literally the entire year. And I mean, just look at the chart. It's been working against the market the entire year. And so in an ideal situation, the dollar will come back to some sort of reality, and that would obviously be very, very bullish for risk on assets, okay? 10-year treasury. This is something that's worked against the market in a massive, massive way. And you can see the correlation is almost perfect to the market, okay? So what happened here? 10-year treasury going down, down, down. What happened during that time? Stocks went up and up and up and up and up, right? And then all of a sudden the 10-year starts spiking again, right? Mid-August. And what happens? The stock market tanks, right? And we see the NASDAQ fell over 20% in a matter of less than 2 months during that time period, right? And so the 10-year treasury looks, you can't get too excited about these things, but it looks like it's probably peaking. And if that baby starts to fall, get ready for just another of like 1,000 reasons why the market's going to go beast mode over the next couple months here, essentially. So definitely keep an eye on that, okay? United Airlines, after the bell, reported numbers. The stock up about 7% after hours. In regards to United Airlines, they beat huge on EPS, and I mean massive. And, here's the deal. Wall Street's all bearish right now. They're all expecting these bad numbers for these companies, right? You can't have, a situation where a stock like this beats huge. You can't have that. I mean, this is a massive, massive beat, right? Total revenue also beat, not as much, but the EPS is where the real beat is. But the biggest thing for me in regards to that is they say demand is as solid gets. And they're seeing no slowdown in demand or anything like that, okay? And so that gets into the whole, there's so many recession fears and things like that, right? And it's like, okay, all these recession fears. Well, my hair is ridiculous. Okay, I'm going to put on this hat. I'm just going to say that. I do need to get a haircut, and I apologize for all the people that always are telling me to get a haircut. I'll get one. Okay, it's eventually going to happen. I've just been a little busy. It's a little bit of a busy year. Okay, if you didn't know, 2022. But all these recession fears and things like that, and then United comes out and basically says, hey, demand is as strong as ever, and we're seeing no slowdown at all. Right? That causes, I think, Wall Street to say, okay. We've been talking about this devastation of the consumer. Well, shoot, if United's demand is not slowing, when is this happening, right? And so they keep having to kick this can down the road to Q1 of 23, then it's going to be Q2 of 23. And eventually, we'll see a slowdown in some of these areas, right? But it's not today. And so if it's not today, then, Wall Street's really caught off sides. And obviously, Wall Street's always looking at these things from more of a short-term perspective, right? After the bell, Intuitive Surgical, another more risk-on play in the market that's been hurt quite substantially over the past year, makes a big upward move, up over 10% for Intuitive Surgical, which is basically a company that's in the robotics industry in relation to surgeries, okay? So procedures grew approximately 20%. Basically, a lot of people put off let's call it more minor medical procedures during Rona, and now we're starting to get those procedures done. The compound annual growth rate between the third quarter 2019 and the third quarter 2022 was approximately 16%. The company placed 305 Da Vinci surgical systems, a decrease of 9% compared to 336 in the third quarter of 2021. The company grew its Da Vinci surgical system installed base to 7,364 systems, which is a 13% increase versus the same time last year. And also their revenue came in at an increase of 11%. So, here's the thing, man, when you got these stocks that have been absolutely obliterated and are near 52-week lows, right? And many of their stock prices are down 40, 50, 60, 70%, some of the stocks. Doesn't take much. Doesn't take much to get those stocks in the positive momentum soaring in the other way, right? Doesn't take much. And that's exactly what you see in a stock like Intuitive Surgical. Adobe is the best example of this. This stock moved up over 3% after hours, right? And this is a stock that's been absolutely wrecked this year. Absolutely wrecked, right? What happened with Adobe? Here's what happened with Adobe. They have reaffirmed their fourth quarter numbers, okay? And they also gave some preliminary financial targets for fiscal 23, but we'll have to see about that, right? But this was a big deal with it. They just reaffirmed numbers, and the stock's up 3% plus. When you've gotten your stock price devastated so bad, it doesn't take much to get a little positive momentum there, and that's exactly what you see playing out in a stock like Adobe, right? Salesforce makes a nice upward move here today, up more after hours. Starboard announced they're buying shares of essentially Salesforce, and so this was a situation that. This is something that, a lot of people have been looking at for more bottoming confirmation of the market. People want to see either other companies buying into other companies or private equity companies building out big positions in, companies like a Salesforce or whatever. They like to see stuff like that because that gives them confidence that, hey, big money is out there buying right now, right? And a lot of Wall Street, obviously, extremely negative on the market. Still, I was watching CNBC earlier, right? And, these folks are still very, very bearish. It almost seems like they're in denial at this point in time. And it's natural, right? Because whenever the market is so used to going one direction, at first, when it goes the other direction, it's kind of a stage of denial. Like, no, this can't be real, right? And I faced this at the end of 2021 and at the beginning of 2022, right? Of that denial phase, right? Because so used to a bull market, and then all of a sudden we get a shift, and it's like, no, what's going on here? This can't be real. What's happening, right? And so now we're so used to this bear market, right? And just stocks getting absolutely obliterated. And many of these stocks have fallen, their stock price have fallen 50, 60, 70, 80%, while their earnings haven't fallen at all for some of them, or maybe have fallen 10% or so, right? And so you're in a dynamic now where the bears and the folks that are just negative on the market, right? They're looking at it and they're like, no, there's no way. We can't rally. It's impossible. There's no way, right? Might be a little sign of capitulation there when you aren't even entertaining the idea of any sort of potential rally, right? You gotta just take a step back here. And you gotta say, these stocks are down 40, 50, 60, 70%, and earnings for some of these companies are actually getting much better. Not a little bit better, but much better. And the ones that maybe the earnings are getting worse, it's a very small amount, especially when you compare it to how much the stock price is down, right? And so I just think the bears are in kind of a little bit of a denial phase here, and it takes a while for that to wear off. To be quite frank, it takes a while. Tesla Maestro is reporting earnings, and I would not want to be short that stock going into these earnings. Okay, oh boy, you watch what happened with Netflix there, right? Tesla's stock has been absolutely hammered, obviously this year, and not as bad as some other stocks, but for a company as big as Tesla, that's it's been hammered. Okay, and I wouldn't want to be short going into this situation, right? You're talking about a stock that's much closer to its 52-week low and 52-week high. You see so many stocks not reporting end of the world, and their stock price is flying high, right? Netflix is trading at pretty much the cheapest forward P you've ever seen. Tesla is trading at pretty much, Netflix as well, by the way. Tesla's trading at pretty much the cheapest forward P it's ever traded at in the history of the company, right? And going into this earnings, the stock's been very devastated. And, what's going to happen if Tesla reports a pretty good quarter here, right? And Tesla's surprised to the upside in EPS so many times. Doesn't mean they're going to absolutely do it this time, right? But what happens if they do it again? Oh my gosh, okay? And if you're talking about a company that's had insane earnings quarter after quarter after quarter that hasn't really let anybody down, it's been Tesla. So if I was a short going into this one, I'd be a little nervous, okay? I'll just put it that way. I'd be a little nervous because the whole vibes of the market's starting to change. And if Tesla just doesn't come in with a disaster, that stock's likely moving up in a substantial way. So I'd be a little nervous going into Tesla Maestro earnings. The one I'd be way more nervous for, surprisingly enough, is Snap. Which Snap is not a stock I own. It's not a stock I'm interested in owning. But I would be deathly afraid of being short this stock going into earnings. When you see a change in the winds happening here, and a stock like Snap, for that to move up 20 to 30% after hours and into that next trading day, it's not a realm of possibility for Snap. For that stock to move up 40 to 50%, we've seen it happen before. So if there's a stock I would be deathly afraid of being short into earnings, it would be actually Snap, because that one makes the biggest moves. With a stock like Tesla, as a short, it's like, okay, maybe Tesla stock moves up 4 to 7% on earnings the day after, something like that. Okay, you can deal with that, right? A stock like Snap, if that baby moves up, you're talking about 20% plus easily. That's not even like hard to get that stock up 20+%, right? We've seen it a million times before. So, when it comes to a lot of these stocks, I'm just like, I'd be a little afraid. I did this on my iPad on Sunday night, essentially, and I did year-to-date moves in I only looked at $10 billion+ market cap companies, right? And so Tesla's down 48%. As of October 16th, NVIDIA down 62%, AMD down 62%, PayPal 58%, Meta 62%, Snowflake 54%, Adobe 49%, Intel 51%, Netflix was down 61%, a whole lot less now, especially as of tomorrow. Shopify negative 81%, Etsy 55%, Palantir almost 60%, Skyworks Solutions been cut in half, Nike's almost been cut in half, Square 68%, Zoom 60%. I mean, those moves are insane, okay? Absolutely insane and epic. And, all these folks so bearish on this market, I don't think they just understand how everything that was working against the market is starting to slowly shift and work for the market now. And that's why we're starting to see this rally play out in the market. And, the way I look at this is earnings are likely going to be much better than almost everybody feared, while stock prices are compressed and everybody's basically thrown the kitchen sink at this market in terms of fear, sentiment, capitulation. A sign of capitulation is people believing that there's no such thing as any sort of major rally in the market, right? It's a sign of capitulation. We're there. I look at what retail believes. Countless people on the retail side, I read through comments all the time on my videos, and I love how many folks are like, just, think the market's going to keep tanking. And over the past, I would say 4 weeks, I've seen an insane amount of that sort of sentiment about the market's only going down from here, things like that, right? That makes me feel pretty comfortable. I turn on CNBC, and every single person that just about goes on there is negative. And, it doesn't take much to start switching this person over, this person over, this person over, and it's going to be interesting, especially once we get a little further. Watch the video I put out if you didn't get to see that on why there's going to be an epic rally in the market. I put that out 5 days ago. Obviously, we're already up, as of after hours. I think the Nasdaq's already up probably 7% since that video went out, 6 or 7%. And countless stocks have already moved, pretty huge, but this is just a start. I think there's a whole lot more at play over the next month or so, if not 2 months, to be quite frank. But definitely watch that video. Also watch the Tsunami of Buyers video. Those are ones you're just going to definitely want to check out. So I appreciate everybody joining me. As always, much love out there. Thank you for everybody that subscribed to the channel. Make sure you get your free stocks from moomoo, while they still got that deal going on this month, up to 15 free stocks valued up to $2,000. I will be pinned comment. And have a great day.